The commercial real estate market is as dynamic and fast-changing as ever. In 2023, there were some serious concerns in the marketplace. However, in 2024, there are some great opportunities to get after. In over 20 years, we've navigated through the Great Recession and some great up times, doing billions of dollars of transactions and creating a portfolio of $250 million. Today, we're going to use that wisdom to talk about where we're currently at and what I plan to personally do to execute on investment strategies in 2024. If you play these opportunities right, they can mean life-changing goals for yourself, your team, and your portfolio. The overarching theme is focus on market observations. Observation number one is there's a lot of distressed debt in the economy. This really started in COVID. All of a sudden, things froze up for several months. It was very bad. Then, coming out of COVID, things started to shoot up. Values shot up, rents shot up, costs shot up, stock market, the whole economy shot up into this new inflationary period based on low interest rates in this hyperactive economy. Well, sure enough, the Fed had to respond because too much inflation is a bad thing. So we jacked interest rates up from 3 or 4% on debt to 7 or 8%. The 10-year Treasury went from less than 1% to about 5% within a matter of months. We've unprecedented growth of 8 rate hikes within a short period of time. Then all of a sudden, what's happened is the distressed debt situation kicks in. Why? Because a $100 million asset with a 4% rate is $4 million in annual debt service carry. However, at an 8% rate, that's $8 million annual debt service carry. The pro formas designed earlier for these projects were built to carry 4%, not 8%. So massive debt. That ranges from the banks and some of the bank failures you saw through commercial real estate, through even residential. Anyone with fixed assets was impacted. Whenever there's distress and change, there's always opportunity. Contact and attack distressed opportunities. One strategy of a distressed workout is contacting the borrower and explaining, Mr. Borrower, you're clearly upside down because rates have gone from 4 to 8%, and that has lost all of your equity, and you're about to lose the property to your lender. However, what if we come in and provide rescue capital to pay your debt service and fix your financial situations? And we're going to structure the deal where you're going to get crammed down to next to nothing, but it's still better than losing the property. And however, in 3 to 4 years, when we fix it, we finish the project, we develop it, and the market's a different place, you then can recapture some of your equity. By doing those workout situations, you can create win-wins where you capture an amazing asset and the borrower still has a chance to live for another day. We've talked about a couple of big commercial deals. However, the market opportunity is still there for as small as the residential acquisitions. As we know, the market softened in 2023, given the fact that rates went up so much that buyers could no longer afford the same properties. With that said, if we believe there's market changes coming and the Fed is going to make announcements and we're not going into a recession, it might be a great time to acquire residential and understand that as rates drop, the market's going to heat back up and you can get in now. Another macro trend and opportunity is focusing on migration. What states are having net outflow? What states are having net inflow? If it's well known that the population is moving from the Northeast and New York City, for example, down to Florida, and we all know that Florida doesn't have enough housing and is having a housing crisis, therefore that creates an opportunity to create more residential real estate in net inflow states. Now, what do you do with the outflow? The outflow has different challenges. Cities like New York, where there's all the outflow, now all of a sudden you have office buildings that are vacant. What can this building be repurposed for? Could it be a hotel? Could it be residential? Could it be a conversion to some other creative use? Focus on the change, focus on the good and bad, because you can find opportunity in up markets or down markets. As an individual example of migration patterns, there has been an outflow from Portland and the Pacific Northwest and California. As such, a lot of developers won't take action in Portland. What are we doing? We're attacking. We're under contract on a Burger King that we're going to convert to a specialty build-to-suit in downtown Oregon. Why would you do that? There's 50% vacancies. Restaurant owners have left. The city is in a very concerning place. But if you take advantage and you buy in those markets at distressed prices and you have a user and you can build that and you believe that Portland is one of America's great cities, beautiful infrastructure, the trees, the mountains, the people, kind of a granola hipster place. You have to have the vision, you have to have the confidence to make a bet and take action in markets where other people are not. And that's how you capture opportunities. Doing and being willing to do what others are not willing to do. In 2024, industrial remains an extremely hot topic. Why? Logistics, shipping, online shopping, Amazon, all these things are driving more needs for more industrial facilities at key locations. We're now moving to the concept of last mile industrial and smaller, more infill in order to solve the problems of quick logistics. We want things now. When you see these trends, get in front of them. Think about investing in a cardboard company 10 years ago before online shipping did. That's just as simple as what we're doing now and getting in front of opportunities. See it, take action on it. Believe it or not, in 2024, retail is actually an opportunity. A few years ago, the retail market was very concerning and just how bad will it get damaged by online shipping. However, what we've learned is that the consumers are showing new patterns. High-end luxury retail is doing great. Retail located in mixed-use projects near office and apartment is doing great. How do you take advantage of that? Well, if you recognize on one cent, Amazon was out here shipping packages. Now they're doing some limited retail. Walmart was completely bricks and mortar. Now they're a huge online presence. What we're gonna see in the next chapter is these worlds converge, and you're gonna have businesses that are efficient at both and know how to leverage it. Think about when Best Buy recognized that all their stores effectively were shopping playgrounds for people to go home and order online. These emergencies are going to continue to happen. How do you see it? Get in front of retail trends and recognize there's investment opportunity there. Another opportunity in 2024 is anticipating interest rates and focusing on cap rates. Believe it or not, you can make investments in stable income properties in these changing markets. For example, what has happened is interest rates have pushed from 4 to 7 and 8%. What did that do? That drove up cap rates. Well, cap rates are now up and those investment opportunities are out there. However, the exciting news from mid-December is the Fed's announcement that there's going to be a handful of rate decreases in 2024. So what's happening is fixed rates are already starting to decrease as the result of this new market anticipation. Therefore, if you go out and acquire the stable income apartments, triple net deals that got cap rates pushed up, lock in these little higher cap rates and are the beneficiary of anticipating the rate drop, that is an opportunity to create unique value in stable, low-risk investments. Another great market opportunity to consider, what if the Fed has created the soft landing? What if we're not going to have this great recession? What if we financially engineer through the monetary and fiscal policy a smooth runway, and then you have an election coming up? If that's the case, we should get back in the market and get aggressive. Furthermore, not to get political, but if Trump gets back into office, there's a high probability that the business markets, stock market, and real estate markets are going to respond favorably to his type of leadership. Therefore, consider, because if you look back at the last decade, we had a Trump bump before in the economy. We anticipated that, we made bets on that. It'll happen again. Why? Because real estate and stock do well when you have leadership that decrease taxes, because it increases the value of the ongoing enterprises. We started the discussion in 2024 on distressed, opportunistic, high-risk, high-return moves. We're going to end the discussion by talking about build-to-suit real estate, stable triple net assets. Build-to-suit is an opportunity in 2024 because it is a good strategy in an up market or a down market. It's a good strategy because you're fulfilling a business's needs. Whether you're building for a Starbucks or you're building for McDonald's or a large industrial warehouse for Amazon, the economy and the need for office or residential space don't drive these decisions. The individual business signs a long-term lease for long-term income based on you solving their problem. That is why build-to-suit is a good strategy to round out your portfolio in 2024. Today, we've discussed a lot of strategies to get after it, make money, create projects in 2024. If you want to dive deeper on how to execute some of these actual strategies, check out more of our other videos.